Hello friends, welcome back to another stock analysis video for long-term investment. In this video, we're going to do a stock analysis about the company called Sonata Software. So as we all know, IT sector is really going well, even in the pandemic situation. Before we get into the video, first let's understand about the company profile and how the future is going to be for an IT sector, all those things. So let's get started. As we all know, this company is an IT service provider to many industries, and it is categorized under tier 1 level, and they are doing in services to multiple banking and financial sector clients, and retail, pharma, and data and analytics, cloud transformations. Like that, they have good amount of clients, and this company has more than 4,500 plus employees across the globe, and they have their presence in India, US, Europe, and Asia Pacific regions. And in India, they have their headquarters is located at Bangalore. This is just a short description about the company profile. So let's understand how the future is going to be for the IT sector. As we all know, even in the pandemic situation in last year, most of the IT companies, they made good profits. How that happened? Comparing the other sectors, uh, IT sector and retail sectors are one of the growing industries, I would say, because let's say in retail, we all need to buy the groceries and other things, right? To buy the home stuffs, all those things are there. So definitely the demand is always going to be there. So obviously retail sector, they made a good profit comparing the other sector, like chemical industries, manufacturing industries, and fertilizer industries, and like this kind of sectors. There are companies made good profits, but not most of the companies made good profits. Very few companies made good profits in the last year, even in the pandemic. But in IT sector, most of the companies they made good profits. It's only because 99% IT employees are working from home, right? So one side, if you see, the employee is making the employee feel secure and safe, and there will be a work-life balance for the employee. On the flip side, if we see from the employer's end, I mean from the company's end, they are doing a cost efficient on uh, transport and electricity bill and their rent, their ODC rent, all those things has been drastically reduced, right? So if all these things happened for the company, automatically they'll make good profits, right? And the only thing which the company is doing to the employees, like they are giving the salary and they are giving the assets like laptop and systems, and some companies they are paying employees telephone bill and internet bill as well. So this is how the IT sector is running currently also. And if my prediction is right, for the next 5 years, this corona impact is going to be there. And for the next 5 years, definitely there's a lot of chances that most of the companies will go with this option, work from home. And who knows, this might be the new trend and the future, the new culture as well, that connecting from home. And and this is just my suggestion, this is just my thought. So from my understanding, definitely there is a lot of chances that IT sector will have a good future. So coming back to this Sonata Software, let's quickly walk through their fundamental analysis in moneycontrol.com. The stock's current market price is 581 rupees in NSC. Let's check in BSC. It's 580 rupees, which is almost 600 rupees. All right, let's quickly check the 52-week range. Its 52-week high is 632 rupees. The stock is moving forward towards its 52-week high range, which is a good sign here. Its SWOT analysis is it's showing 9 strengths, 3 weaknesses, 3 opportunities, and 1 threats. Let's quickly check their weaknesses. Just showing only 3 weaknesses. Negative breakdown first support. Mutual funds decreased their shareholdings last quarter. High volume top losers, which is a kind of negative sign. But let's just go deeper and understand why the mutual funds decrease their shareholdings and all. So let's check their strengths. Strengths, it's showing raising net cash flow and cash from operating activity, effectively using shareholders fund, return on equity ROE improving since last 2 years, which is a good sign for the long term investors. And their ROA is also improving last 2 years, which is another good sign. Company with low debt, which we need to as a long term investors we need to look on this mainly. This company is currently running with low debt. Company with zero promoter pledge. Foreign institutional investors are increasing their shareholders in this company, and this company is near to 52-week high. Great. And their opportunities are brokers upgraded recommendation target price in the past 3 months. So last 3 months brokers are recommending to buy the stock. Good. Highest recovery from 52-week low. Yeah, no doubts in that. RSI indicating price strength. Good. Threats is increasing trend in non-core income. Fine. That's not a problem for the long-term investor. And MC Essentials it's showing 56%, which is kind of a low percent from my point of view. Anything above 70% is a good call. Um, this is about MC Essentials and technicals, money control technicals. It's showing the current trend is bullish, which is on buy. But if you're a long-term investor, we need to wait for it. Let's not go with the current trend. And MC, all right. Let's quickly check their other things. Its current market capital is 6,001 crore, 109 crore, which is good, and its face value is 1, which is very low. Its trailing 12 months EPS is 23.20, which is good, but its trailing 12 months PE ratio is 25.04, which is very high, which reflects the stock is selling overvalued. Anything between 10 to 15% is a good call if it is if for the PE ratio. If something is between above 15, we need to wait if the company is doing good, because 25 and all it's a kind of an overvalued stock. Sector PE is 31.38, book value per share is 86.89, and dividend yield is 3.49%. Not that great. Let's check their chart. I'm just checking their 1 year chart, 1 year return. So last year by 15th May, 15 to in the May month, it was selling around 199 rupees, 180 rupees, between 200 to 200 to 190 to 200 rupees range. And now the stock's current price is 580 rupees, which is close to 600. Let's say 600, which is giving around 200% return in just 1 year, which is a good sign here. Let's quickly check their 5 years return. 5 years before 2016, 16 May, the stock was selling around 140 rupees, and now it's close to 600 rupees, which is more than 200 250 percentage return, which is a good call, which shows the stock is moving really good. And the Petrovsky score is 7. So anything between 7 to 9 is a strong financial company. Petrovsky score, it's showing an excellent report here. And the 3 years CAGR growth is also looks good. Let's quickly check their financials. annual reports. So I'm just going with the annual report, not with quarterly report. Annual report wise, revenue, it's showing a good sign here, good improvement on the revenue part. In the last 3 years itself, it's 2019 it was 2,960 crore, and in 2020 it's 3,743 crore, and in 2021 it's 4,228 crore, which is good. And their net profit year on year, there was a good improvement on the net profit, but in the last year, comparing 2020 and 21, there is a dip on the net profit side, which is like in 2020, the net profit was 276 crore, and in 2021, its net profit is 243 crore, which is kind of almost 30 crore reduced. But overall, it looks good. Let's check the EPS range. So since the net profit reduced, automatically the EPS also reduced here. But overall, there is a good improvement till 2020. There is a good improvement on the EPS range. In 2019, it was around 23.99, and in 2020, it's 26.66. And in 2021, there's almost 3% reduced, which is 23.48 EPS range. And the book value, there is a good improvement on the book value side. 2017 it was 56 rupees, and in 2020 it was 64 rupees, and in 2021 it's 87 rupees. Good. Return on equity, which is mainly for the investors, so there is a decrease, a huge decrease on return on equity, which the investors need to look upon. In 2017 it's 26.47%, and in 2019 32.44, and in 2020 they gave a excellent ROE returns, which is 41.35, but in 2021 it's just 26.94, which is almost equivalent to their 2018 report. So if you're a long term investor, you need to be you need to decide well before investing in this company. So comparing 2020 and 2021, it just there almost 50% reduced on the return on equity. But the good part here is the debt to equity. This company is almost debt free. If you look upon, only 0.10% debt is there in they drastically reduce their debts over the years, over the last few years. In 2018 it was zero point 0.3, and in 2019 it was zero point 0.2, and in 2020 it's 0.13, and now it's 0.10. So debt debt to equity ratio should be 1 or 1.5. If anything above 1.5, which is a kind of risk to invest in this company, but this company is just 0.10. Absolutely, we can go ahead and we can invest in this company, no doubts. And their income statement, total income expenditure is 982 crores. Okay, let's check their EBIT, earnings before interest and taxes. So there's a good improvement on earning before interest and taxes over the last, comparing the other last few years. 2020, sorry, here it's showing quarterly report. I need to look for annual report. Yes, annual report wise, again comparing 2021 and 2020, there is a decrease, slight decrease on the earning before interest and taxes. And the net profit is also slightly decreased comparing 2020 and 2021. And let's check their shareholding, shareholders range. So public is holding 43.69%, promoters are holding 28.17%, which is kind of low. uh, Promoters, comparing promoters, public are holding high volume in this stock. Domestic institutional investors are holding 13.12%, and financial institutional investors are holding 13.82%, and others are holding 1.2%. Promoter range here quarter on quarter looks similar. Let's check in. Financial institutional investors are gradually increase their investment in this company. Comparing December 2020 and September 2020 and March 2021, they increased almost 4% investment in this company. Domestic institutional investors, which include mutual funds, they slightly decreased their investment in this company in this quarter, which is March 2021. Comparing the other quarters in December and all, they nicely increased their investment, but only in March 2021 there is a decrease on the investment from DII's end. Public, there's a slight dip on the public's investment as well, but not that's not a problem. Almost 44, 43 range only, quarter on quarter. Good. All right. Let's check this top holdings. Promoter wise, Akshay Rajan, Viren Rajan, Suman Raheja, Rajan Behija, promoters holding. And FIIs, if we check foreign institutional investors, are Goldman Sachs is holding 1.68%, Orange Marutis, sorry, Mauritius Investment, Mauritius Investments are holding 1.3%. Domestic institutional investors like HDFC Trustee Company is holding 9.25%. L&T Mutual Fund Trustee Limited is holding 2.22%. Public wise, Bodies Corporate Director of Relatives Shrikar Alam Reddy, HUF. All right, trust mutual fund schemes wise, Aditya Birla is holding a good percentage here. Aditya Birla, Sun Life, Digital India, Sun Life India Fund, okay, Sun Life Dividend Yield Fund, good. Aditya Birla, most of the Aditya Birla's portfolio is there. Fine. So that's about it. I hope I covered most of the points here. So from my point of view, this is a good company, but investing in this company at the current moment with this price is kind of high. Uh, this analysis of this PE ratio shows this company is running overvalue now. So we need to wait for the right correction and the right consolidation. When the stock goes down the line, like 500 rupees down to 500 rupees or something, that's the right time to buy and hold the stock for a long term investment. If you're a short term investor, yes, you can do that, but if you're a long term investor, you need to wait for the right consolidation, and in that standpoint you just accumulate it and hold it for long term investment. So this is just my point of view, and as I always say, I'm not a SEBI registered professional. If you this analysis is just out of my suggestion and out of my interest, I'm just doing this. If you think this video is useful to you, just give it a thumbs up and forward it to your friends and families. And I see you all with another interesting video shortly. And also, if you want me to do an analysis about any companies, please just leave a comment. I'm really happy to do that. Yes. Thanks for. This is Kingsley signing off. Thank you. Bye.